Hello and welcome everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It is Wednesday, May 13th, 2020, and we are pre-recording this Trading Places Live for Thursday morning, May 14th. Futures currently are slightly higher, but obviously there's a long time between this evening and Thursday morning. A lot can happen overnight, so we'll see how we open up tomorrow. I want to go over the agenda for today, and got a few things, got a couple little twists today for you, but we'll go over the daily market recap as we always do, and then we'll get into talking technically, take a look at the spider, the QQQ. Of course, those are two ETFs that track the S&P 500 and the NASDAQ 100. Also, I wanted to show you one of the warning signs. I was writing to Earnings Beats members earlier this week, talking about some warnings, and the fact that it'd probably be a good thing to keep tight stops in the event the market started to roll over, and the market started to roll over. But we'll get into some of that in just a minute. A new segment, The Seed. This is just small companies, looking at small companies, looking for relative strength, some strong charts, just to give you an opportunity maybe to get in when some of these companies are small. Seems like a number of these companies just recently have started to show a lot of relative strength. And I'm going to be looking at the medical equipment industry group in particular. It's been one of the strongest areas of the market. So why not look at some of the small companies that are performing well within that group? Then we'll get into I Don't Trust You, which is a segment that features some stocks that were heading higher, but I looked at these yesterday over at Earnings Beats when I did my Trading Places Live over there on Wednesday morning, and mentioned that I just didn't trust these four stocks. So we'll go over exactly how they performed on Wednesday. Then we'll get into our earnings spotlight. I do want to take a quick look at Max Pain for those of you who are into options. Max Pain's the point at which the in-the-money call premium equals or offsets the in-the-money put premium. So really important to identify that and keep that in mind as we approach Friday's option expiration. And then we'll wrap up the show tonight with the three you must see. These are three stocks I think you're going to want to take a look at before the market opens on Thursday. All right, let's take a look first here at Earnings Beats. And if you haven't already, would love to have you come in and subscribe to our free Earnings Beats Digest newsletter. It comes out Mondays, Wednesdays, and Friday mornings. Usually it's a short article featuring one company. Sometimes it's related to earnings, sometimes relative strength, sometimes accumulation distribution. Sometimes it's an industry group featured. But normally it's just a little bit of information I think that can help you in your trading. So check that out. Go to earningsbeats.com and simply right here on the home page, just type in your name and email address, hit subscribe, and we'll make sure we get that out to you starting on Friday. All right, as far as the action on Wednesday, it was not a good day. And I even wrote over in my blog, Trading Places blog, in the morning on Wednesday, just to make sure those of you who follow my blogs were up to date, some of the things I was talking about with members at Earnings Beats earlier in the week. And things just weren't looking very good, and we followed through with some more selling. And I think things are really dicey here in the near term. I still believe the market goes higher, further out, but the bears have their opportunity right here to take the market back down, at least some. I don't expect we're going back to the March lows, but we certainly could go down a little bit further than where we are right now, especially with options expiring on Friday. But on Wednesday, you can see the Dow Jones Industrial Average down over 500 points, down 516 points. The S&P 500 down 1.75% or 50 points. The NASDAQ down 139 points, which was just a little bit more than 1.5%. Mid caps and small caps got hit the hardest again. 3.37% mid caps, small caps almost 4%. And look at this, back below both moving averages, the only one of these five indices that's moved back down below these key moving averages, also closed right on the 700 mark. There's a little bit of support back in April, just below 700, down closer to about the 680 level. We're going to want to see if that holds. We're going to want it to hold for the sake of the small cap stocks. As far as the weakness goes among sectors, energy, very weak, 4.5% lower. Financials just cannot catch a bid now, down almost 3% today, breaking below the April lows. This is about a 6-week low now on the financials. Industrial, same thing. I wanted to see this 59.60 area hold. We got down 59.05 on the close. Still looks like a little bit of a breakdown though to me. Materials also finishing lower, down 2%, just below the 20-day moving average. Not good there. And discretionary stocks right on the 20-day, closed at 112.47. The 20-day is 112.48, so literally almost right on that 20-day moving average. Discretionary stocks down 1.7%. 10-year Treasury yield. This is a little bit of a problem too. We're seeing the market getting a little bit more defensive. Money rotated into Treasuries today. Anytime Treasuries are going up, that means Treasury yields are going down. Treasury yields dropped 3 basis points, back to 0.65%. And more importantly, we're back below that 20-day moving average. I was hoping we would, stay above it. We had finished above it 4 of the last 5 trading days, but we came back down beneath it. I think right now we're between about 0.75 to the upside and 0.64, maybe 6.3 to the downside. That seems to be a little trading range we've been in for the last 6 trading days. I'd like to see that hold. We'll see whether or not we hold that tomorrow. If we don't and start to go back down below that area, and especially back down below 0.60%, that is going to be a sign of more money rotating into defense, into the defensive treasuries, and that likely is going to coincide with some more selling, perhaps impulsive selling in U.S. equities. So please be careful out there. All right, let's move on to the talking technically. And in talking technically, what I want to do today is I want to take a look at the QQQ because, and this was one of the things I wrote about in my blog, here as we were going lower, you can see we moved down in price at the end of February. The AD line came down. But when we came down to a new low in March, and we went quite a bit below that late February low, notice the AD line held. So we had a positive divergence. So we had the AD line, the lows rising, while the lows in price were declining. So that was one of the things that alerted me to look for stocks that were showing strong accumulation during that downtrend. And that has served us very well for the last 2 months. But the problem recently is now we got the opposite taking place. We've seen the QQQ go higher 2 times here from the high back in mid-April, and you can see the AD line was at a high. But these last 2 highs, as we were moving up, the AD line couldn't get back above that mid-April high. So now we've got prices going up instead of down, but now we've got the AD line going down instead of up. So that's a little bit of a warning sign. It was not confirming this push to the upside. Now, PPO looks good. Maybe we'll hold the 20-day. We did bounce just above the 20-day. We'll see. I'm still maintaining my bullish longer-term stance, but I do know it's option expiration week, and there are reasons for the market to pull back here. And so I'm not surprised that we're pulling back. And in fact, during a webinar that we had with our members at Earnings Beats last night, Tuesday evening, one of the things that I mentioned for today, for Wednesday, was that I thought that NASDAQ could bounce and get back up close to that 20-day moving average, but that would be the test. And if you notice, in the first hour today, we went right up above that 224 area. We were up a couple bucks on the QQQ, hit that 20-day, and immediately started selling. And that was not a good sign. And so the selling really accelerated. We fell from 224.61 at the high down to about 216 and half roughly, 216 and 3/4 maybe, in maybe 2 hours or less than 2 hours. So that was a pretty big drop to drop that far. I mean, we're talking about 3.5% in 2 hours. Those are what I would refer to as impulsive moves to the downside. So if we break it down even further and go into a 10-minute chart, you can see at the end of the day, this was pretty impulsive, where this is not like just, orderly selling. This was a lot of selling at the end of the day, volume picking up, and we never like to see the end on the down note. I mean, now we have a downtrend in play. I would say we have a channel that we need to watch here on the QQQ. But I think we're going to probably struggle to get up above maybe 221, 222 in the near term. I wouldn't feel out of the woods until we get up and take out the high from Wednesday of 224.61. I don't think that's happening in the near term. I'd be surprised, even as bullish as I am, I'd be surprised. I think we need to go a little bit lower here in the near term. So watch this double bottom that went into 217. If you see the QQQ make another impulsive move through 217, I think that's confirming some additional weakness in the market. So keep that in mind. As I looked at the spider, saw basically the same thing. So let me pull up the spider here. Show you the AD line first. Here was the drop. When we went to new lows, did not break down. And then notice we got to the high in mid-April. There was the high on the AD. But the last high, we were moving lower. And this time we couldn't even get through the high. The NASDAQ, the QQQ did go through the high briefly, but the spider could not make that new high. And you can see that the selling kicked right back in. Red filled candles, increasing volume. That's taking the AD line down even further. I think the spider looks like it wants to roll over and head lower. But stocks that were leading the move to the downside back in February and March, I think are going to be the ones that lead again to the downside as we move lower here over the next few days. If we move lower over the next few days, I think we will. All right, so that's pretty much what I wanted to go over with, or in talking technically. I want to move on to this new segment, the seed. And again, what I'm trying to do with the seed is take a look at some of the smaller companies that are showing relative strength and at least consider the possibility that they could be just now germinating, just now getting ready to move quite a bit higher. And it's always more profitable, obviously, if you catch some of these fairly early in their move to the upside. Now, you may look at some of these charts and say, well, it's too late. Well, if a company's starting to grow its earnings, or if its company is benefiting from the pandemic, this is not too early. In fact, if we get a pullback, some of these could create some great opportunities. So let me go over the first one here with you. And again, these are all going to be medical equipment stocks. First one is Vapotherm. And this is a relative chart, Vapotherm versus the medical equipment index. And you can see it was rough in the summer of 2019. We stabilized. And then in March, as the pandemic started to kick in, that's when we had this huge move up in Vapotherm. And you can see now the relative strength quickly broke out to its highest level since it's been a public company. If you look at the absolute chart, this was a stock that was down under $7 back in March when the buying first started. And you can see the huge volume pick up and the massive amount of gain. Went back down, tested the 20-day. We have not closed below the 20-day moving average since that move up in March. So keep that in mind. If we get a pullback and get close, maybe into this gap support zone down around that 20-day moving average, I think Vapotherm is one to maybe keep an eye on and watch. Another one that I think looks really interesting to me is IRTC. IRTC, and that is iRhythm Technologies. Stock over about a 15-month period struggled a little bit on a relative basis. Prior to that, this was a pretty strong company relative to medical equipment, and it has really picked up in the last several months, last 4 or 5 months, 5 months maybe. After dropping initially in March, you can see mid-March when the S&P 500 bottomed, this stock has been absolutely crushing the medical equipment group. And so let's take a look at what's going on the chart, on the absolute chart. You can see breakout. So after we went down in March, tested these lows back in November, December, came roaring back up, nice volume there, and then just kept going. We have not even had a 20-day test since April 13th, so it's been a month. IRTC really needs a 20-day test, but if it were to get one, that would be down close to 110 right now. And price yesterday, Tuesday, was up as high as 137 or so. So that would be a pretty steep drop. To drop back that far, it'd be about a 20% decline, but that could create some opportunities, nice opportunities if it did that. Next up, BSGM. So let's go back over to the relative strength. All right, BSGM. And you can see, not really doing much for 5 years, mostly sideways. Then the end of last year, all the way until the middle of March. This was not a good looking stock. Middle of March, just kind of fell into the pandemic, fell right into their lap. This is BioSig Technologies, a huge relative move to the upside on this stock. And if we look at the absolute chart, you can see since mid-March, look at the volume pouring into this stock and the AD line just soaring on this move back to the upside. Looks good. GNMK. So GNMK was downtrending for over 3 years versus the medical equipment group. But again, this one actually, beginning of March, absolutely took off to the upside. So let's see what happened here on the absolute chart, middle of March. That's where the volume came in, moved up. And initially, you can see the AD line went down in the first few weeks. A lot of gap ups and failures on big volume. But that has since changed. Look at all of these hollow candles. There's a lot of buying now. We're going through a period with big filled candles. So you can see a couple of these to the downside, but then we had another really big day with heavy volume back to the upside. So the AD line has been staying up there. I wouldn't be surprised, though, if we were to consolidate a little bit. I think 9.5 to 10 could come back into play here. FLDM, Fluidigm. Relative basis. Now, this one was under a lot of fire for about 9-10 months from June of last year, actually almost a year, till about 9 months, I guess, to the low in March. And now since then, we've rallied back, and we're now at about a 7-month relative high on Fluidigm. And as we look at the chart, you'll see that just recently the stock gapped up, actually just broke out, didn't really gap up, but it opened about where it was the prior day here on this first day of heavy volume. But you can see a lot of movement to the upside. I'd be looking for a 20-day test here on the FLDM. Looks pretty good to me. The last one I have for you is, I think it's OraSure, OSUR. OraSure Technologies. Again, a company here that for more than 2 years, 2.5 years in a downtrend relative to medical equipment. But latter part of February is where this thing took off. So OSUR, definitely a stock that is looking much better. I will offer up a little bit of warning here. First of all, the AD line looks great, but we have higher prices, lower PPO. I wouldn't be surprised to see this one maybe take a swift move below the 20-day, possibly as far down as the 50-day. And then I think we might get a little recovery from there. In fact, I'd look for a big recovery. If we get down to the 50-day, I would definitely be a buyer. All right, let's keep moving. Next segment, I don't trust you. This was one I started over at Earnings Beats, as I mentioned yesterday. And I went through 4 stocks that had good days on Tuesday, but I just didn't trust the stock, or had been strong. I don't even know if it was up on Tuesday, but it just recently been strong. So the first one is Alta. Now, Alta actually was down yesterday, but it had been moving higher and had gotten above and was trending above the 20-day. PPO was positive, and I simply said I didn't trust Alta because look at the volume picking back up and the move down, and look at the AD line. So despite the fact that we had been doing all this movement to the upside, notice there weren't a lot of big hollow candles in here. And when you don't have hollow candles, you're not going to have an improving AD line. So a lot of this to the upside was just gap ups. So it was almost like manipulation to me. So Alta, I did not trust Alta. And on Wednesday, it did come down 6.74%. The next one I didn't trust was Planet Fitness. And that's mostly because of the pandemic and the fact that we've got a paradigm shift. I think gyms are going to be really struggling for customers for a while. Being inside an enclosed area for an extended period of time with other people is not something that I think a lot of folks are going to quickly return to doing. And also you have to understand when you're working out, you're breathing harder, and the virus, the virus particles, you're going to get a lot more of them out when people are working out than when you're just sitting down and you're calm and you're not breathing heavy. So the whole going and working out at a gym right now is just something not very appealing to me. And so even though the stock went up and got through the 20-day and it actually recovered a lot of losses, notice the AD line never went higher than where it was on this first move. So even though it kept going higher, the AD line couldn't go up. And for that reason, I did not trust Planet Fitness, and I still don't. Planet Fitness down almost 8% yesterday after I talked about it. The third one, Vulcan Materials, VMC, another one that broke out. We went up, put in a double top, was trying to get through. PPO went positive, but as we were moving higher throughout this entire period, look at the AD line, setting new lows. Hard to trust a stock like that. In addition, we had come down and we had broken down below this support around 100. So I did not trust Vulcan Materials going into the action yesterday. And again, this was another rough session for this stock, down 5.75%. And then finally, AutoNation. Now, AutoNation, a couple things bothered me about this stock. Nice rally, PPO looked good, but a couple filled candles, number one. So the AD line heading into yesterday, the AD line had deteriorated to a new low, even though we had been in this significant uptrend. Also, one thing I had pointed out, you want to always check relative strength, because when you're looking at this chart, and I'm going to go back now and just show you, you look at this, and if you had bought it at 22.5 and it was up at 40, you'd have said, great, that's been a great trade for me, no doubt about it. But one thing you do have to keep in mind is that you have to look at what a stock is doing on a relative basis to its peers. This is a stock that's been downtrending since a relative high all the way back in September of 2019. So AutoNation relative to the specialty retailers has been incredibly weak. And even with all this strength of late, it could not break out. So yes, it's been moving higher, but it's a underperformer. The AD line has been struggling. And now, I went into yesterday's action thinking, I don't trust you, AutoNation. And AutoNation was down 9.7% yesterday. So sometimes it pays not to trust. Earnings spotlight. Let's go into just a couple of stocks. Actually, the one big one after hours was Cisco. So Cisco, I think, up a couple percent after hours. Let me pull up this chart for you. We'll take a quick look. All right. Cisco beat on the bottom line, 79 cents versus 72. It's got to get through $44. It was not doing that the last time I looked after hours, but it needs to move up, and I'd like to see an open above $44. Otherwise, I have a feeling it's going to be sideways consolidation or another move down. 43.94 is what I'd be watching on Thursday morning. If you don't open above that number, I would be skeptical unless we have big volume and can close above it. If we open underneath 43.94 and we can't make that breakout, I would expect we're going to probably head back down to test this 40.5, 41 area. All right. One stock that was doing pretty well after hours with its earnings was FLO, which is Flower Foods. Flower Foods was up about 6% after hours. They did beat on their bottom line, 41 cents versus 34. And if you look, this stock actually was doing pretty good with its AD line at the recent high. It has pulled back a little bit, but I think this move, 5 or 6%, we're probably talking about maybe $1.20 or so. That would be 23.80. That could clear most of these highs. Now we got to get through about 24.30 or so, but overall, flow doesn't look too bad here. All right, one stock that did struggle after reporting earnings Wednesday evening, ONEM. This stock missed. They were expected to have a loss of 18 cents. They had a loss of 32 cents. It was priced for perfection. Had a reversing candle in play heading into its earnings report, though, and the stock was down 7% after hours when I looked last. So we're talking about $1.80, which would take us back to about $24.75. That's where we're going to probably open somewhere around that 20-day moving average, and we'll see if we can hold it. That's where we have been holding in the past. All right, Max Pain. I want to talk Max Pain because I had a webinar for our members last night. And I'm going to go through and just show you a couple things real quick. Nope, that's the wrong. There we go. One thing I wanted to show you was the QQQ, because for members, I put in the Max Pain for all of these. The QQQ's Max Pain, the point at which in the money calls, the total premium in the money calls equals in the money put premium, is at about 209. I think I looked after, during the day, and I think it was a little bit over 210. But we were at 227, 228 on Tuesday. And by midday Wednesday or late or in the afternoon on Wednesday, we were down to 216. So we are, and that's what I look for, is a directional move. Not necessarily that we're going to go all the way to 210, but I would not buy the QQQ when it's at 227 going into option expiration week when I know the max pain level is at 210. I just wouldn't do it because there's too much risk of the market suddenly pulling back and it being options related. So I would be a little careful. I still think the QQQ has some downside. So that's one that I definitely wanted to point out. Another one I wanted to just point out quickly is Tesla. So Tesla, you can see max pain here is at 720-ish. That solid horizontal line you can put in as an overlay. Just go to the horizontal line, put your number in, 721.50. And that's what I'd be looking for. Now, earlier today, Tesla did get down to 763. It rebounded, but it potentially could go a little bit lower based on max pain. Two more to give you. Facebook max pain's all the way down 187. You can see the stock was over 215 on Tuesday and as low as 202 and change on Wednesday. Certainly heading down toward, that it's giving us that directional move so far. And then the last one is CMG. This was one, I love CMG. I think it's a great stock. But when you get a reversing candle, shooting star, off an uptrend, negative divergence, lower PPO, higher price, I think this one is heading for its max pain, maybe even lower. Max pain on CMG is down at 845. So good stock. AD line looks good. PPO, except for that negative divergence, had been very strong. So I think we're going to go through a period of weakness, and then CMG probably will look a little bit better. All right, let's wrap this thing up with 3 you must see. I am going to start here with X-Ray. X-Ray, you can see, has rolled over. The PPO has rolled over at the center line. AD line breaking back down. Just even with the stock moving up recently, it could not break out on the AD line and has rolled completely over. So I think X-Ray is one that I would be very careful with, even though it had an up day on Wednesday. Next up, Advanced Micro Devices, AMD. Got a double top, a little bit of a cup here. Maybe I think we're working into a handle. I wouldn't be surprised to see AMD pull back as far as maybe 49, maybe even a little bit of a scare, go a little bit below that. But I don't think it's going to go down much lower than that. I think the AD line continues to be pretty strong here. So I would just be looking for more sideways consolidation. AMD continues to be a very strong stock. And then a stock that I've been talking about quite a bit of late, stock that I really like, is Teladoc. Today it went up, tried to get that breakout. I think this cup is now complete. So I think we could see a little bit of sideways action. But check out this AD line, accumulation distribution. It's been absolutely beautiful. Continues to rise along with price, confirming this action. PPO has been staying above the center line. I think Teladoc looks really good. And if you pull up the relative chart, you will see that it has been one of the stronger stocks in software. And software has been on fire relative to the S&P 500. So I think Teladoc's a good way to end the show. Hope everybody is safe out there. Please be careful as we go into options expiration Friday. Happy trading, everybody.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.